Hi, welcome to another episode of As Good As Gold podcast. Today I'm very proud and very happy that I'm joined by Mr. Nizam Ismail. Now he is a very experienced professional in the area of compliance. He's the CEO and founder of Ethikom Consultancy, a compliance-focused consultancy based in Singapore. And also Mr. Ismail here has more than 30 years of experience and expertise in the financial services regulatory compliance. He has worked with regulators, exchanges, markets, banks, brokers, you name it, even global fintech and blockchain firms. He once served as a regulator in the Monetary Authority of Singapore, where he was the Deputy Director and Head of the Market Conduct Policy Division. So I think there's nobody else that's better to speak about compliance than him. Also, he has held senior compliance roles in global investment banks. So welcome, Mr. Nizam Ismail.
Thank you, Raymond, for having me on your program.
Right. Would you like to maybe do some self-introduction for our viewers?
So here at Ethikom, we help financial institutions, fintech firms on various kind of compliance issues. I think compliance has become front and center. Whether you are aspiring to start a business, you want to apply for a license, or whether you are an innovative platform, you want to apply for the sandbox, or you want to set up a compliance program for financial institutions, or even if you're not financial institutions, compliance is still an important part of the business process.
Right. So for a lot of our customers, right, and even customers of banks, of financial technology firms, and even other financial services institution, what customers see is always the front end. They will see what happens to my money, what happens to my app, but a lot of us don't have vision over what happens at the back. So a lot of people probably don't know what compliance really is, how it affects the running of a financial services firm. So in a nutshell, what does compliance do in an organization?
Sure. The reality is an industry like financial services is the most heavily regulated industry in the world. So if you were to print out all the rule books, let's say here in Singapore, the MES rule books, it's going to occupy more than this table here, probably a few times of this table. So it is that voluminous. And regulations are also getting more and more complex, and they are changing all the time. So what does this mean if you're a financial institution or a fintech firm? It means that you are always on your toes to find out what kind of rules apply to your business, and how do I put in controls to make sure that I comply with the rules. But beyond that, it's also about doing the right thing, and that is what compliance is. It sets the tone for the firm to do the right thing. And the right thing doesn't just mean following the letter of the law and ticking the boxes, but you're also guided by a sense of ethics, put in place a governance structure, and to do something that is win-win for everybody, including the customers that you deal with. And of course, you might ask, so for the consumer, the average retail consumer, why are we bothered about compliance, right? The thing is, when you look at financial services rules and regulations, quite a lot of it are actually designed to protect the customers or consumers. As a consumer, I want to make sure that the financial institution I'm dealing with has got a good compliance culture to eventually protect my own interests. And I want to make sure that the financial institution is going to be there in the medium or longer term and not close down because their licenses are being revoked by the MES, or God forbid, they enter into some areas of misconduct and customer funds are missing or unaccountable and they had to shut down, or there's some massive litigation. At the end, I lose out as a consumer.
Right. You were just talking about why is it important for consumers to know that the compliance culture or the compliance setup in a particular company is sound, right? So compliance has always been the reason that companies use, right, to address red tapes and processes. Do you agree with it? Whenever consumers say, "Hey, can you do this for me? Can you do that for me? Why can't my money be used to do this, do that?" And then sometimes companies will just say, "Oh, compliance. Hey, compliance." Do you agree with this? way of doing things?
I think the company shouldn't just put the blame on compliance. I think it's problematic when you don't treat the compliance team as part of the same team.
Right.
You are part of the same team. So when I used to conduct training at financial institutions, the message is everybody is a compliance officer. And there's a capital C compliance officer who is part of the compliance department, but everybody else is a small c compliance officer, because it is in everybody's interest that you protect the medium to longer term interests of the company. What are some of these red tapes? Typically, now opening bank accounts or any account in financial institutions can be quite tedious, right? Because you have to furnish information, you have to furnish documentation. It could take time, particularly when a company wants to open a bank account. It could take weeks, right? And there are good reasons for that, because of really anti-money laundering checks, anti-terrorist financing checks, and all kinds of screening that are being done by financial institutions. Now, why should I care about it, right? So I think you should care about it, because if the financial institution doesn't do proper KYC, then it could theoretically be a place where people launder their money, or bad actors or criminals put in their ill-gotten gains, or terrorists use it to fund their terrorist activities. And over the past few years, we have seen some financial institutions being shut down by the MAS. Why? Because their KYC wasn't robust enough, right? Now imagine if you're a customer in that bank, right? It is very tedious, because you have to think about where your funds are. Yeah, they're probably still safe.
Yeah, of course.
Yeah, but your entire bank might be different, right? But again, it just points that sometimes these processes are there, and they are there for good reason. And it's really to protect everybody's interest. It protects the bank's interest. It's to protect the consumer's interest. So I mean, I sympathize, because the AML regulations have gone more and more prescriptive over the years, but that is the rule of the game anywhere in the world, right? Because there are global standards that are being adhered to.
As bad actors become more creative, so does the all these processes, right?
Oh, yeah, absolutely. Because bad actors always find a way to skirt around regulations, right? And so there's always a bit of a cat and mouse game. So bad actors might use, for instance, technology to mask the proceeds of crime, and then there is a response by the financial institutions and regulators to keep pace with those kind of abuse of technology. So there is a response. We can take one good example is cryptocurrencies, right? I mean, in the past, there have been instances where, let's say, bitcoins are being used to trade on the dark web and buy nasty things, drugs, human slavery and all that. However, people forget that bitcoins are on the blockchain, and the blockchain is a permanent record that is there of every transaction, and it is immutable. It can't be changed over the years. So now law enforcement will just need to look at the blockchain and track down all these Bitcoin transactions, and they actually have prosecuted people based on things on the blockchain. And then along the way, some people start using anonymous coins, or they start using tumblers or mixers. Tumblers or mixers are places where you effectively cloak the source of the cryptocurrencies.
Wow.
Yeah. But then now there are tools to track back those coins, even if you use tumblers or mixers, and that is a red flag in itself. So there are more and more sophisticated tools, because on the blockchain everything is immutable. You can actually track where the coin has come from the point in time when it was minted, right down to the point in time where exactly. So there are abusers, but increasingly financial institutions are using more, we call it RegTech or regulatory technology tools, in order to prevent financial crime from happening.
Cool. Yeah, talking about that, of course we know of a series of high-profile FIs, financial institutions, getting into very big problems. What lessons are there for all of us? Not just for the financial institutions, but also for the customers of these companies.
I think you're probably referring to some of the crypto-related failures last year. And I think that's not good for the crypto industry, because I think there are lots of benefits that the blockchain or the whole digital asset space can bring to the broader economy, and cryptos are a part of that digital assets economy. However, I think for some of these intermediaries, whether they're exchanges or their funds, the problem is we have seen the crypto industry going up that way very, very quickly. It has grown tremendously, and there's so much innovation that has taken place, right? Whether it's DeFi, whether it's staking or lending, or NFTs, and those are not the bad things if done properly and responsibly, right? But of course, there are bad actors in that space. Now, the problem for some of these intermediaries is that they do not have the kind of controls that exists for traditional financial institutions. Now, let's take deposits on banks. I have $100, I put it with a bank, the bank manages it, the bank is subject to stringent regulations on what it can or cannot do, it's subject to liquidity requirements, capital requirements, and then I take back my $100, and then that $100 is protected, it's a deposit.
Yes.
Now, unfortunately, if I put in $100 worth of Bitcoins with a crypto player, there's not much regulations governing it. So there is a big gap in regulations on what the crypto player can do with cryptocurrencies, and therefore, it's a case where regulation is trying to keep pace with innovation, and certain requirements that exist in traditional financial institutions do not exist in the crypto space as of right now. So there's a big gap. Now, of course, you can argue that the crypto players should have known better, and that if I'm taking 10 Bitcoins from a customer, I'm an exchange. I better preserve it, I don't touch it, and when the customer wants his 10 BTC back, I give it back to him. One would have thought, right? But of course, people get creative. The 10 BTCs sitting in the wallet, so the crypto intermediary might say, okay, maybe I should do something with it and try to get some gains for myself as well. That's where the problem is.
I'm sure that those companies have their own compliance officers too. So does this mean that their compliance team did not stop them, or did not flag that, hey, boss, this is not a great idea?
I don't know. I don't want to speculate. Maybe there was the case. Maybe the controls were not strong enough. Maybe the process of governance or internal approvals wasn't there as it's supposed to be, or maybe they were just trying their luck in a space that is largely it is regulated now, increasingly so, but there's still gaps in regulations. But I think what might be more helpful is to flip it, to view it from the point of a consumer. I think it is always important for the consumer to ask the question, who am I dealing with? What is the legal entity? I mean, you can go on a crypto exchange, but you don't know what entity you're dealing with. Is it a Singapore entity? Is it a US entity? Or is it an entity based in an offshore jurisdiction, a tax haven jurisdiction? So find out who you're dealing with. Find out whether they are licensed to begin with, right? Because maybe some exchanges are not licensed out there. And then if they are licensed, are they also licensed in Singapore? They could be licensed in a jurisdiction that makes it difficult for the consumer should something go wrong, right? So always do your due diligence. And of course, there are always risks when putting your cryptos in a wallet that is on an exchange. So you might want to risk manage yourself. You can either store it in a cold wallet or have another set of wallet. I mean, these are the things that you do to protect your own interests.
Right. Can you share how regulators like MES can protect consumers?
MES regulations are risk focused, depending on the kind of risks that the financial institution presents. So for certain institutions that hold assets on a longer term basis, for instance, banks hold a lot of deposits, right? Or insurance companies, there are longer term insurance contracts. It is very important to ensure that they remain they are alive after 30, 40, 50 or 100 years, right? Hence, there's a lot of emphasis on what they call prudential regulations, capital requirements, risk-based capital requirements, liquidity requirements. That's one aspect of regulations. The other aspects relates to retail consumers. So, for instance, retail consumers might want to buy investment products like stocks, bonds, unit trusts, or investment-linked policies, right? For these sort of products, the shift is on market conduct. So market conduct governs things like disclosures to the customers. So if you buy securities, you have a prospectus, right? So all the disclosures are there. Or if you were to buy a unit trust, there's also a prospectus, there's all kinds of disclosures. But beyond the disclosures is also how the intermediary sells the product to you. So there are requirements, for instance, for senior management to sign off that the products are suitable for the customers that they are targeting. It's product or client suitability. So there's another level of requirement. And then the selling process. So if you were to buy an investment product, there is a requirement that a financial advisor sits with you, asks you about your investment objectives, your risk appetite, your sources of income and all that. So the product that is being suggested to you has to be suitable for your own. I mean, for instance, you can't push a technology-based fund to a retiree, right? I mean, where there's lots of volatility. So it has to be fit for the audience that you're looking at. And then there are all kinds of disclosures that the advisor has to make, whether there's a conflict of interest, whether what kind of fees that it is getting for that particular sale transaction. And as a consumer, you should also ask these questions, right? What kind of fees you are making from this? Is it based on an advisory fee, or are you making a certain cut of the product? So if he's making a certain cut from the product, it means that he has an incentive to push that product to me.
Yeah.
Right? So these are the kind of questions that you want to ask. So there are all kinds of prescriptions on regulations, on the selling process. There are also requirements for compliance to do checks or audits on the whole, processes to make sure that there are no gaps in terms of process.
Cool. So last year we got our major payment institution license, and we were all elated when we got it. Right, it was a huge milestone for all of us. And of course, governing MPIs like us, behind that is the Payments Act. Now, can I explain for our viewers how the Payments Act, what is the Payments Act, and how does it govern MPIs? Okay.
So the Payment Services Act was introduced in January 2020 after quite a long consultation period. So it is meant to provide legislation, a comprehensive legislation, to regulate all kinds of payments activities in Singapore.
Right. So for a company to receive the MPI license is to say that the processes are satisfactory in terms of security. The technology behind is robust. Basically, consumer interests are protected.
Well, as part of the license application process, obviously you have to satisfy MAS that you have certain processes in place, right? So MAS will review the applicant's compliance manual, technology risk management manual, controls and processes. So you have to, of course, and there are other things like resources as well, right? Your organization, your compliance resourcing. So there are all these factors that the MAS considers before awarding a license.
Right. So just now you were also talking about companies need to be very careful, or rather agents of a company or financial services company have to be very careful to make sure that you recommend products to consumers based on that is suited to their interests, right? So when can companies offer me, you, or anybody financial advice?
To offer financial advice, you need to be licensed under the Financial Advisors Act, and that's financial advice on investment products. So investment products are defined essentially as securities like equities or shares or funds or a fixed income instrument or bonds, things like that. So to do that, a company has to have a license under the Financial Advisors Act. Banks are exempted from the license, or securities firms are exempted from the license, but their persons have to comply with the business requirements under the Financial Services Act.
Right. So only when you have the financial advisor's license, then you can offer advice.
Yes, you can offer advice on investment products.
Oh, that's strict. Thank you so much.
My pleasure, Raymond.
Right. So once again, thank you. I hope that you have enjoyed the insights that we shared here on how robust companies are taking painstaking steps to ensure that the processes are compliant for consumer interest. Tune in for the next episode of As Good As Gold podcast.
All opinions in this podcast should not be regarded as offering any financial advice. Listeners are encouraged to seek advice from a qualified financial advisor regarding the suitability of any financial strategy, taking into account their specific financial objectives, situation, or particular needs before they act upon any recommendation.